The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Exciting edition of the Power Trading Hour with me, your humble, lovable, soft host. And we're going to check in with the markets here as we do most trading days at the start of the show when there's anything going on. Right now we've got the S&P up, what is that? Five, let's call it 6 points. 2,067, up at the extreme range of what we should have seen as witnessed by options. Of course, if you've been listening to this show and into Wednesday, I'd been looking for a huge short squeeze, and actually been looking for a huge short squeeze for at least a couple of weeks. I was very surprised to see the downturn that we had, and I thought we'd get up at least to 2050, and probably got out a little early on our positions. We both we bought the SSO at about 119 in the daily newsletter and sold it out. What was it, about 127? It was upper 126s or 127. Got a little higher out here. It could go a little higher, but my guess is that we are in a really dangerous market to be long probably after today. And why I wanted to get out, and I often say sell when you can, not when you have to, and that's exactly what we did. I probably would have made a little bit more money today. In fact, I would have made a lot more money, but I didn't want to wait the last day. We had one position. And, of course, today, it waited till today to finally move. We had options on FireEye, and we bought out of the money ones. And, of course, it went fairly decently. But once they started getting in the money, we wanted to go ahead and get out of them a little early. But what a day out here today. Too bad that it waited just one more day for us, but I didn't want to get caught in this. It's triple witching today, and of course, a lot of things can go on, and they could easily, we could have seen our out of the monies that just had got into the monies turn to dust as quickly as they turned to solid gold as they did in this one. And we had plenty of other positions out there that we did make very good money on, so I wasn't going to get too, how could I say, I wasn't going to get too piggy. I guess that's probably the best word, isn't it? Piggy. And that would be, bulls make money, bears make money, pigs get slaughtered, and we already had some good moves on there, so I kind of enjoyed that. Getting out a little bit early, even if we left a little bit of money on the table. We had some other ones. That SSO trade looked fairly good this week, and we were talking about it mid-Wednesday. If you go back, I just could not find a whole lot of charts that weren't making at least temporary lows out there, and we're going to get into something like that here in the coming minutes. But I digress. On this day in 1868, $120 a share, Cornelius Vanderbilt buys up 130,000 or more shares of the New York Central Railroad, which he already controls. Then Vanderbilt convenes an emergency meeting of the board of directors who dutifully declare an 80% dividend. That sends the stock shooting up to 165 over the next 2 days, which Vanderbilt dumps his new shares for $5.5 million profit, and it instantly goes back down to a lower price than it had. And of course, probably until 1930, there were basically, it was the wild, wild west of stock markets. You could do anything, manipulate your own stock, sell short your own stock. In fact, one of the biggest guys in Wall Street, I'm trying to remember who it was. I think it was the Motorola. Was it Motorola or RCA? I think it was the RCA guy, who actually borrowed money from his own company to short his own stock and then took the profits and paid back his company. He did, but they finally, it's kind of like now where we get congressional investigations 4 years later. It took 4 years, but he was finally dragged in front of Congress and excoriated. But a provision in that 1934 Securities Act was basically against that guy, saying, hey, you can't short your own company, and especially you can't borrow shares from your company to borrow money from your own company to short it. But he made about $10 million on that in 1929 money being short in the crash. So a lot of people knew what was going to happen in that, and there will always be operators. They just operate a little differently these days. And if you really don't know what a stock operator is, I always highly recommend reading Reminiscence of a Stock Operator, probably the single book that I would read first so that you actually understand how the market works. Now, it's changed over time. And I'm actually doing a audiobook version of that now that it is public domain. But I'm also going to point out the things that have changed. One of the biggest things that changed is from Jesse Livermore's time in the early, I guess he was really a factor from about 1907 to about 1933 in the stock market. But the biggest thing that changed was that there were about 200 stocks that had any volume that were actually tradable. Compare that to about 5,500 stocks with more than 300,000 shares a day today. It was a lot tough. So basically, you had to play the Intels and the Microsofts and those kind of things. And people were always out there thimble rigging, as he used to say in the book. That thimble rigging is a kind of a game that's now, I think, called three-card monte, where they take the cups and they hide the thing underneath it on the street. And basically, they're charlatans trying to steal your money. But when it originally started, it was a P underneath thimbles. And those guys were called thimble riggers. But you'll see that a lot in the book. And in some other things. But what I'm trying to get to was they had about 200 stocks in the entire market. Going into 1929, only probably about 5 of those stocks you would consider tech stocks. Almost all of them were either steel for making rails, or steel for making locomotives, or steel for something else, or the actual railroads themselves, and or transportation, and or maybe Ford Motor Company, that kind of stuff. So they were either industrials or they were basically transportation of some kind. So the market's pretty much all moved at once for the most part. So if you were right on the stock market, you were probably going to be right on your equity too. Today, we've got gold shares going up on bad days in the general market sometimes. We've got crude markets that trade a lot better. I don't think there were crude markets. Almost everything that was traded back then was corn and cotton and a lot of other stuff like that. But I digress. But there's nothing new under Wall Street, nothing new at all. There's always somebody out here. And, of course, as soon as they dam up one way of cheating, the people on Wall Street who are not there because they're Mother Teresa find yet another way to skin a cat and or kick a dead horse. So, what can I say? That was pretty much it. We wanted to think about it. Actually, the title of this slide is wrong. Just wanted to bring it up. The average household is expected to spend $550 less on gasoline in 2015 compared to 2014, as an annual motor fuel expenditures are on track to fall to their lowest levels in 11 years. And that has a lot of people in a tizzy. I say. So what else can we say about that? Well, probably not a whole lot. Wanted to get stocks that were moving. And, of course, one of the biggest movers out here today was BlackBerry. And I wanted to bring up the movement in this. Basically, this is one of my living dead stocks. It's a stock that's pretty much dead, just doesn't know it. We saw another thing happen today when they came out with earnings, or lack thereof. These stocks and the CEOs that run these stocks, like Radio Shack, are there generally for one reason, and they are hired not because they are great technical innovators, but they are great at presiding on a decline in the stock until it goes bankrupt. And they excel at taking out as much cash as they can and putting it in their pocket, and at the behest of the people that own a lot of shares, making sure that the stock trades kind of sideways, a little bit up, a little bit down, until it finally has no cash. It reaches the tipping point. Everybody knows it's busted. And I imagine that this year we're probably going to see BlackBerry crash below $5. I think it's probably going to take maybe another quarter. The problem is 45% short interest. What do? Well, if you've got a ton of cash and it's not yours, and you can borrow huge amounts of cash and it's not yours and you don't have to pay it back, you just sit on it. You got, a million shares short of this thing. You got $9 million if the thing hits $1. And you'll buy it back. Now, what we saw today was the thing gap down appropriately, but because you've got 40% interest or short interest, and you've got a whole bunch of people out here that would like to even make $1 going into Christmas on this thing, they run it right back up. So still off yesterday, and there is, of course, a lot of people trying to push this that own the stock, want to keep it above $10, so conceivably they could pawn it off on some funds, which probably 95% of them these days have a limit for a $10 stock or higher. Once it goes below $10, they start to sell it. Used to be $5, but of course Dodd-Frank and a lot of the money at risk models, just because of the volatility of an under $10 stock like today, makes it very hard for big funds to own them. If they own this stock, that means that they can't get leverage on other stocks that they would like to own. So why not just buy more expensive stocks above $10 and be able to keep that kind of leverage, especially over the last few days? Imagine being able to go out and being 30-1 in your fund and having BlackBerry in your portfolio. But if you sold BlackBerry, maybe you could go 35-1. Did you ever think about that? So maybe these people selling off in this last little move did nothing more than free up a position and some cash, but also leverage, because they're buying stocks with a lower volatility, but they were still going to move up when probably not a lot of opportunity to in BlackBerry. So when we watch stocks like this, you always want to keep an eye on them. Another one I wanted to show out here was Red Hat, RHT. I like this stock. And of course, the problem may be that this may be the all-time high on this thing, at least going forward for several years. Got up to $70.13 today. It's back under 68. So we'll always keep an eye on these. But seeing a lot of stocks out here that probably well beyond what they should have popped out here today. But again, way too many shorts in this market, and what I was talking about for the last 2 weeks, and that was a huge short squeeze coming out and the opportunity to make money on out-of-the-money calls, which we did, and even buying the SSO on it. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And one of the stocks that's popped out here again today, and you may want to watch for an island reversal coming back on Monday, and that is CarMax, KMX. And guess what they had to say? That is a huge easing in requirements for lending on cars made a huge difference to them. So we didn't learn our lesson in housing, and apparently we're just trading cars for housing this time with the 7 and 8 year leases for people that have questionable financial backgrounds. And it was interesting, but certainly the FICO scores were down about 50 points for getting the same loans, which is a huge drop in this industry. My guess is that this is going to come back to bite us all again anytime soon. But if we have any kind of recession in this market, look for a lot of car loans to probably go south that were made this fall. And I would watch very closely for an island reversal on CarMax, maybe on Monday. Certainly, we're getting some gaps up here and pretty lofty levels for some of these stocks, so keep an eye on them. He had something else. What did I have here?
You got mail, baby, yeah.
Yes, I do. And Trung asks, do I see a bottom forming or short-term bottom forming in CLF? And the answer is yes. but that short-term bottom may only last through the first of the year. So I wouldn't be, if you were going to go long, certainly Wednesday morning was probably the time to go long, or Tuesday. I find it kind of tough to think that you're waiting now to go long on some of these things. Didn't get much of a bounce out of here, but here is the opposite side of CLF. Of course, these guys are in everything that is headed down. But there's one more thing, and we brought up, I think a year ago, maybe a year and a half ago, that President Obama said that he was going to bankrupt coal companies. He lived up to his promise. Now, if you believe some of the people around him that have been talking this last week, he is now internally promising that he's going to bankrupt more of these miners or anybody that has anything to do with, anything, digging in the ground, being around it. And I take him at his word. He was he basically did it to the coal companies. And, of course, Cliffs, I think, has a good component of coal. But it is what it is. Elections have consequences. He doesn't like coal and apparently doesn't like mining and is going to go after it probably a little bit harder. And what else can you say? It's he's got the EPA. There's some new 500 regulations to take effect at the first of the year that no one knows what they are. I would stay away from any of these commodity stocks until we find out what the EPA is planning out there. They had some pretty nutty people in that EPA that were basically the extreme end of the Luddite community about what we should do, and I don't know just how far he's going to push it, that being the president. So I would just be very wary of being in this sector at all. We've got John on the Philly on the line. How you doing, John?
David, I'm very well. Yourself?
Fantastic.
Actually, yes, you would be fantastic. You've had a good week.
Had a good week.
David, first a compliment. 2 weeks ago, when the S&Ps were at the highs, you were laying the stage for the last 4 weeks of the year, expecting not that much. Then we got that big sell-off December 8th through the 12th into the 15th. And your work, given all the things you were looking at, led you to think there'd be some good profit opportunities on options, call options positions into options expiration. That paid off very nicely for you. So congratulations on being right and for the right reasons. And I would like to hear you speak, if I could ask you to do so, on the factors that shape your thinking on what will drive prices the first couple of weeks or first month or two of the new year. You've mentioned those in the past, but I would sure like to hear them again, and perhaps your listeners would as well.
Okay, we're going to be going to break here. Hopefully you can hold through and ask me any additional questions after the break. But I think this is as far as a dangerous market, it is probably twice or three times as dangerous as it was before we had our down move, and I'll talk about that when we get back.
Thanks so much.
Okay.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back and talking with John from Philly a little bit. But I guess the question is, what do I expect next? And that is a lot of volatility and most likely to the downside. The reasons are that markets never get more dangerous than when there are no shorts. There's always some natural buyers when it goes down, just like we saw with BlackBerry today. It went down, and, of course, if it's too highly short, then, of course, everybody covers at once, and the stock really didn't go down anymore. And that's kind of what we had before. Okay. But what we got in this week was all the shorts run out. So now we probably don't have anybody that's, let me put it this way, there are no weak-handed shorts. If you're still short today, then God bless you, because you lived through being short what most people could never, ever go through, right? So There's probably a handful of people like Chanos and those guys that they didn't blink. They didn't think about it. They're looking at a long-term picture on this. And frankly, there are a lot of stocks out here that may make Monday a nice little top out here. Basically a little shooting star top out here maybe on Monday. But my guess is that we're going to start seeing people heavily distribute some stocks. And one of the reasons I think so is looking at Apple. Let me pull that up real quick. Apple was up at 119.75. Had some shorts in it. But again, off the bottom, it got down to 106.26. It's up, 113 or so. It just didn't get a lot of love when a lot of other stocks had some huge moves out of here.
Right.
And that makes me think that probably the NASDAQ is probably the weaker of the two in the S&P between that and the NASDAQ. The other thing is, and we're going to cover it tonight in the Tech Insider Hour with Tom O'Brien, but one of probably the biggest things out here is we had the biggest IPO seasons for tech since 2000, since actually 1999, 2000.
Yes, we did.
And that also tells me a lot, since 90% of those IPOs had something to do with tech. So I'm going to be looking at a few things. This will be the last radio show till I come back on January 5th. I'll still be writing my newsletters. But if we look at something like GoPro, GPRO, this thing has IPO lockup the 23rd. So what is that? That's Tuesday going into it. So it's going to be light volume out here. We could see some fireworks in it. But so many of these stocks have done this in the IPO community, and one of two things has happened. It's done at Google, where it ran up and then everything went to hell in a handbasket, and you had an opportunity to buy Google again. Then it went from $100 to $700.
Right.
But I don't think these are Google stocks. I don't think that there's that in it. GoPro was sold as a media company. And as they say, sell the sizzle, not the steak. They weren't selling it as a company that sold $200 to $500 cameras, armored cameras.
Correct.
For active people. But I'm thinking that if you're the kind of guy that jumps out of airplanes with bat suits and flies down the cliffs of Dover with a wingsuit, or you're climbing a mountain of ice that's probably going to fall on you, you probably bought a GoPro already.
Or somebody who likes to drive motorcycles 1,000 miles an hour. Somebody we enjoy speaking to weekly.
Well, I had a Super 8 camera on mine, and I always wanted to have a good camera, and actually pitched this to my partners at one time, and that was I was going to use a DVD. But it wasn't, they didn't like the idea. And of course, a lot of times ideas take 10 years to get to fruition and the technology to come in. But I think that it would have been an early opportunity for a camera. I've told a story before that in taking an art class at a place, one of my first films, I had built kind of a geodesic soccer ball with a Super 8 camera in it and threw it off the top of a long cliff and watched it roll down to the train station down there in Kansas City. And that was kind of an interesting film, but that was my film entry. It's kind of interesting to watch everything just roll downhill, fly off the top of a $100 or 100-foot tower, and then roll another quarter mile down the street. After 3 of them, I got one that made it. That was my entry. But the whole idea of having armored cameras and using that kind of stuff is interesting. There's a company called Red. If you just do Red in cameras, you'll see that they basically have 95% of the market in Hollywood. And it's basically the same thing, but super high-res cameras for film production. And they have big backs that just have tons of memory on them. Mm-hmm. And that was kind of the idea that I actually had early on, was build a camera and make buildable backs, and as memory size gets better, you can just keep taking the time and make it longer and longer. But to me, there's a few things, but I'm starting to see a lot of these stocks that we had that were extremely questionable, like GoPro, in their valuations. And now GoPro up there at $90, you were paying $20 premium to get it short.
Yes, you were.
So I wouldn't have bought that. I mean, there were better ways to go out there and get it. And the premium on the option mean that at this price, you still probably aren't making any money. You're going to have to watch this thing crater down to $20 for them to make any cash. So I didn't like it as a bet. But as a prototype, I think there are a lot of these companies out here that are like this. They're going to start seeing IPO lockups coming out, especially when we start seeing the lockup in things like Alibaba. More shares coming probably to market from Yahoo. Apple being fairly questionable. We're going to talk about that tonight, where even some insiders at Apple are questioning the iWatch. To me, I'm trying to figure out where the real benefit is. And two, I think this is the quarter. We only saw one company really blame the exchange rate. Everybody was hedged. But those hedges run out of time. And I think this move from $80 to 89, I'm figuring that most companies, if they had half of that hedged, I'd be surprised. They probably had half of it, right?
Right.
Probably didn't have a $10 move in the dollar index hedged out internationally. I would say that it's about the same amount of people that had the move in oil hedged out properly. They may have had it hedged out to 78 or even 75. I doubt very few people had it hedged to 65, much less 56. So we're seeing a lot of stuff. And two, I'm just wondering about any of these companies that are out there that we're going to start seeing, like long-term capital management, that have blown up over this. It's been eerily quiet about a lot of these funds that are out there. I bet that there wasn't anybody this week that was going to blow up. My question is, what's going to happen after that? And two, what's Putin's next move? My guess is he hasn't thrown his last shoe in the direction of the United States over this deal. He's going to pull something. The question is whether he puts missiles in Crimea, nuclear missiles pointed at Europe. He's going to do something to save face. He had to backtrack this week, but my guess is it's only going to be a matter of weeks before he does something. Does he invade the rest of Ukraine on the next full moon, which is January 1st? I'd be watching for something like that, or missiles, or some other provocative act to make sure that he's got his machismo for the Russians. But I don't know. It's hard for me to see any more money leaving Russia that already did in the last probably 3 or 4 weeks. So I think that's probably gotten to a low of actual changes in financial interest. It's probably more interest now of geopolitical politics. So I don't know. Do you see another move to $79 in the ruble? Or 79? Is it 79 cents or 79 bucks? I'm looking at that chart and I can't remember which one it is for the exchange rate. But that's it. I think we've got a market that if anything came out, you have no natural buyers below. So that we could see a huge move down in this market, which always makes me nervous. If we saw a bunch of people shorting on Monday and getting a base back under this market, but my guess is there's not going to be anybody that has the intestinal fortitude to go pulling this market short on Monday. What do you think?
Very good. David, listen, thank you so much for that discussion. I've taken down every one of those points, and I'll look forward to hearing from you and speaking with you that week of January 5th. So thanks again.
You bet. And we have more mail, I think somewhere. Where is that mail? Let me look at it.
I got mail. Yay!
I got mail. That's all that matters. Enjoy your show. We'll take a look at InnovaSense and a $14 possible buy. Well, this thing couldn't rally today, so you know it's going to probably come back and test the low down here at 1350 that's untested at 1350 on November 14th. 2.6 million shares is what you want to look at. You could make a case this thing's been underneath the high volume low of the 29th, but it's tough for me to go back and figure out exactly. I'd want it to go down and test 1350 before I played any stock that's this low already. I've had too many stocks blow out to the downside. We've talked about Apple, and I think the biggest problem with this company is that it is not on the Apple gravy train. They make GPS motion detectors and some other stuff. And I think a lot of what we've seen in this stock was the fact that they are not getting that Apple Cash checks about from all this stuff. But they basically make a lot of motion sensors and 3D gyroscopes and that kind of stuff. And if they aren't doing well when Apple's selling as many iPhones as they can, then that probably tells you something. What's going to happen when everybody that's got an iPhone has pretty much got an iPhone, and you're back to some kind of run rate that's maybe a quarter of the units they've sold over the last couple of months? I would be very wary of buying at this company if it can't do well today, much less when I think it's going to get hit on probably a general pullback that we've seen in Samsung. So a lot of reasons to think that this company probably has much farther to drop than higher to go. I'd stay away from it. Quaihu, can you see Quaihu going higher? Q-I-H-U. Now this is the China website company, and they had a fairly decent ABC on the way down. And for me, let's take a look and see if there's anything else out here. I don't see, I mean, this thing's on a 1-year chart, and it's been making ABC downs, and I can't see any reason why to think this thing does not just continue on down. An ABC down on this one would take you to $32.97, and with the way China's been doing, I could easily see that being a problem. You had some high volume as late as the 9th of December, and you're kind of light out here. Could you go sideways for a while? Yeah. Did you break the low of October 15th, which was $60.25, 4.4 million shares with higher volume? And the answer is yes, 5 million shares on the 9th. So you've broken a low, you've broken the B point on higher volume. This thing's kind of playing around. Can it go sideways for a couple of weeks and maybe go up a little bit? The answer is yes. But the 1-to-1 takes you to 32. Let's go back and look and see, is there anything back here at $32? I mean, you had kind of the plateau where this thing traded in that range back to mid-2013, and it went up to about $40. That's probably where support is. So at best, I'd probably want to be, if you're watching my mouse, there's this area out here which is May 3rd of 2013 through... what is that, June 24th of 2013. And to me, that area is probably where support is. What's the low a day on that? $40.05. So that's probably your next support area out here. I'd be looking for Quaihu to be out there. And it just looks like everybody's throwing their money at Baidu. Not Baidu, at Alibaba. And it's tough for me to see that. See how much time we got left. Okay, got Quaihu, got CLF. Awesome, thank you, sir, on CLF. Now, if there's anything else out here, let me take a look. Let's look at X1. There are a few stocks out here that look like they could be making short-term bottoms, but boy, do these things look ugly right at the moment. And did they bounce? The answer is no. But one of the better-looking stocks out here is finally some of these 3D stocks. Like we said a couple of days ago, we had bought out of the money 30 calls on DDD, and it popped nicely, but we got out of it before it pulled back. Just not a lot of juice in this one. Let's take a look at... when we come back, we'll take a look at SSYS, because this one really blew up, and it's hard to find out why. We'll be back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And it is an interesting closeout here, setting up for the end of the day. I guess the president's finally done speaking, so we can see if there was any changes in the market. A lot of times they'll pull back a little bit. And yes, it looks like there was a little bit of change in the market here. Finally, now we're up 13 points. This is at the very extreme range of what I was expecting. I thought maybe 2045 was probably a pretty good place to get out. Yeah, up another 30 S&P points from there. But I'll let all the other people go after the last 30 points. The first 60 was probably the great. We got a little gravy on here, but again, that probably just shows me how many people got short in this last little move that are now out and finishing up short covering today. I would not be surprised to see a nice little pullback come back Monday and Tuesday. Of course, we're going to have options rollover for those 2 days. I do not think that we're going to go blow out the tops anytime soon. We're probably seeing all the fun buying coming in now. there is no 100% rule that you've got to, but my guess is that fund managers probably jumped a little early this year in buying what is normally the first part of the year. Normally, they'll buy at this part of the year, so don't expect a lot of movement in the first couple of days with fund managers diving in. My guess is that they already committed to the long position for any cash that they may have had laying around already. Again, their charters talk about how they have to be fully invested by the first two or last three, or the first last 3 or first 2 days of the month. And that does mean that you can go long starting on the 20th. Most do not. Most do wait until the very end of the month to do it, but they do not have to. And I'm expecting that everybody else saw what I did, which is most of those stocks bouncing, and every fund in the world threw some cash at it to close out this year at a high. These will be the same people that will be looking to exit stage left the first of the year. Look for very light volume, and if there's a stock with still super high short interest, still could see a great deal of movement back in those stocks. But I digress. Wanted to look at a few other ones out here. There are a lot of stocks out here at these highs, and you're going to have to see whether or not these things actually have any juice. I'm kind of interested in Outer Wall is one of the stocks that seems to be the last company in the buggy whip business. Of course, they have the red box retail outlets, and they're selling and basically renting games too. And maybe they're going to do a little bit better in that game business as they move along, as companies like GameStop have some real problems. Let's take a look at GameStop. Even this thing, which is a giant dog, did go out and test its GameStop I'm talking about, did test the February low out here, $32.11, 6.5 million shares with 4.4 million shares, but it came down on heavy volume. Could this thing get back up into that gap? It's got a nice big gap up here at about $44. I would love to see a short squeeze in this thing. Try to get it back up into that level. It may never happen. It may just be stuck in this lower range. May only get the gap up here to $35. But again, this company is probably so easy to see that everybody and their dog is short this thing. It may take a long time for this thing to break now. Just too obvious, and unfortunately, the watch pot never boils. We'll see you in another hour for the Tom O'Brien Show and the Tech Insider Hour. In the meantime, sell when you can, not when you have to. We'll see you back January 5th. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.